Hey, I'd like to welcome you to another episode of the Mission Matters Money Podcast, your source for all things money. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, missionmatters.com, and click on Become an Author to apply. All right, so today I have a special return guest, Jim Brown, who's founder of Your Best Mindset and creator of Jim Brown Investing. Jim, welcome back to the show.
Thanks, Adam. Great to be back.
Oh, man, so I've been loving to do these reunion episodes, as I like to call them. It's like getting the podcast family back together again, and so great to have you back on the show, and I'm excited to get into today's topic. So volatility in uncertain times. So you're the guy I want on the line for that. But before we get into that, let's go. I don't want to assume that all of our new listeners caught your first episode. So let's get into what you're doing over at Your Best Mindset and Jim Brown Investing. Tell us a little bit more about the company, please.
Right. So what I'm focusing on currently is working on with individual clients and group clients in a mastermind format, people that really want to up their game in their understanding of how the markets work, how to function effectively in different market environments, and really how to stack the deck in their favor. And I do that in different ways. One is if someone wants individual one-on-one consulting, or the group consulting mastermind format. That's what I'm primarily focusing on. I've also developed a course, Jim Brown Investing, which is more of a DIY. So those are the three avenues that I'm focusing on.
So what kind of, let's go a little bit further into, there's a lot of investors, a lot of would-be investors listening, and what are typically the right types of people that are right for both Your Best Mindset and Jim Brown Investing? Like what are the right type of clients?
Right, so it's the best fit would be someone that has money to invest. So generally someone in the close to at least the mid six figures in liquid assets to invest, because they'll get the most return on the knowledge immediately, but also a really great fit, which is kind of how I kind of just walking my walk, is someone that's really serious about investing in themselves. So even if they don't have a tremendous amount of assets now, they're headed in that direction. So an example would be someone that just graduated from grad school, whether it's someone in healthcare or an attorney or MBA or something like that, where you may have some debt, or you just paid off your debt, you're starting to build some assets, and you want to get on the right track right from the start, as opposed to kind of seeking around trial and error and finding your feet that way. So those are the two groups: people that are ready to that have the assets to invest immediately, and alternatively someone that's serious about investing in themselves, doing things right from the beginning, and they're starting to build assets and accumulate wealth.
Let's switch it a bit, Jim. I do want to get into today's topic, so volatility in uncertain times. Where do you want to start with that one?
Right. So the first place to start, where I think everybody should start, is a look at themselves and understanding their investment profile, and really how they react to uncertainty, and really not even limited to the financial markets. If you have your own business, or you have a career, just think about the last time there was an uncertain environment, a significant uncertain environment, layoffs if you're an employee, drop in volume if you're running a business, and how you reacted to that, and from different time perspectives. One, did you plan for it? So that you had a couple of things. Did you have an emergency fund? Did you have at least access to cash, whether that's a credit line or something like that, so you know you're not going to be trying to make do or die decisions in the moment? Two, in the moment, how did you react? So whether you're dealing with assets and investments in the financial markets, whether it's in your career or managing your business, how did you handle that? As opposed to assessing yourself when everything's calm, which is good to do. That's good to plan that way. Because just thinking it, and the differentiation I'm trying to make is theoretically and in practice are two different things. So if that makes sense. So you could say, oh, yeah, I have a very high volatility, I'm a tolerance of volatility. I'm a roller coaster person, not really a carousel person. I can really take the ups and downs in theory. So how you react in that way. Then where are you in your timeline, your time horizon? How close are you to retirement, for example? Okay, so literally how much risk can you bear if things turn south for an extended period of time, several years? So that's the first assessment to make. And then once you do that, try and get a really objective assessment of the current market conditions, or if it's in the context of your business, the industry conditions, and then go from there. So assessment's always the first step.
Where do you find that people, and obviously this is going to vary from investor to investor, situation to situation. I know there's a lot involved, but I know certain themes tend to kind of repeat themselves over and over. Where do you find that a lot of people go wrong in this process?
Okay, so a lot of times it's mindset, and really the extremes. You're either overconfident and therefore susceptible to fear and greed, right? Whether it's FOMO or fear and you're staying out, selling at the bottom or when things start going down, and you're really not someone that's equipped to trade. So if you're a long-term investor, dollar cost averaging, and you kind of get spooked and shaken out of the market on, I don't know, let's say a 10 or 20% downturn, and you're not really playing short, you can get burned there because then you may be apprehensive about getting back in. So I see people running into trouble there. So really, and I mentioned overconfidence, where you kind of, you could have been lucky and not really yielding success based on your investment skills and acumen and knowledge, and you may be basing your confidence on that when it could be just a really strong bull market over a period of time that's causing those results almost solely and not your ability. So those are areas, and the other side would be really just extreme risk averse when you're young and intelligent and you have a lot of opportunity. You just don't seize it because you maybe heard stories of people close to you, friends or family, that may have lost a significant amount of money. So those are the two areas where people go relatively wrong.
Man, you nailed it. I see that happen all the time, and it's tricky because it's like, let's just say that you happen to have come into a big cash event in 2009 or 2008, whenever we're just kind of like starting that curve of that big bull market that we went on, and now you start investing them at the low point of the market, and you're like, and that overconfidence thing might get in. Like you might think that some of the things that the decisions you made were based off of your genius versus the entire market going up for a really long time. And then where we stand today, 2020, when we're recording this, we've had some volatility and based on some pullback. And based off of that, this may be the first time, if you weren't around for some of the other, downturns, tech bubble in 2002 or go even further back. I mean, you can count as many as you want back. It comes with experience too. So love what you mentioned. So Jim, that being said, we can talk about this all day long, but we're about out of time on this episode. If somebody's listening and they want more information on Your Best Mindset or Jim Brown Investing, I mean, what's the best way for them to connect?
Right. So you can find me at jimbrown.investing.com. You can also find me on LinkedIn, Jim Brown, and also on Facebook on Jim Brown Investing.
Fantastic. Well, hey, Jim, really appreciate you coming back on the show for this reunion 2020 episode. Can't wait to have you back on in 2021, see what's going on over there. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. If you did, don't forget to subscribe to the podcast, leave me a review in the Apple iTunes store. And if you're watching this on our YouTube channel, Mission Matters Money, definitely give us a subscribe there, but also leave us some comments on the video. I mean, love to know what kind of things you're working on, what kind of projects you have going on in your neck of the world. And Jim, thanks again for coming back on the show.